Okay, cool. So let's get started and first just talk about this gold trade that we just entered. I was not able to send this over Zoom because it was forming literally right when I sat down. But essentially, we have boom. This is the start of New York session. The London session low was right here. Okay, we take from the body of the wick down. Okay, we see that New York session comes down, takes out these lows. Okay, we come up, come down, break structure of this high on this candle. I enter, I get filled, stops underneath here. First take profit is London sessions high. First take profit is London sessions high. Then we have another intermediate high right here. And then this, I just kind of eyeballed it. I just kind of chose a little area. There was like this sort of thing right here. So I was like, whatever. We'll toss the final take profit there. I could honestly see this thing going even higher. But we're just going to leave it at that. Solid risk to reward ratio. That's pretty much all I see. We just broke structure on the 15-minute, so that's a good sign. But yeah, that's where gold's at for us. So we already have a bias on gold because we're in a trade. If we go over to GBPUSD, so this actually followed plans pretty perfectly. As you can see, we drew this up last night. This is the dick and balls pattern. So essentially, we had two balls and a dick to the upside. And at the time, we didn't know that the dick was going to be formed, but we were able to spot the two balls in the ball sack, and then we see Asian session causing a rally, and with some pretty on point targets over here. Still looking like it wants to take out these highs, so we were not wrong with that analysis. We can go ahead and actually remove the dick and balls now. But I just wanted to put you guys on the game for a little bit. Show you guys the strat that is undisclosed that I actually use. That's the secret sauce. But yeah, there we go. We have that. Then another great example of dick and balls, even better. Right? We have boom, ball sack, dick to the upside, ended up taking out these highs like we said we wanted them to in the Saturday Zoom. So another W for the dick and balls pattern. Never ended up taking trades on these because it was on Sunday, but predicted the market perfectly with that strategy. But anyways, right now for GJ, there's not much we can do besides, see if it wants to come down into, see if it wants to come into those London lows. That's about it. Same thing with GU. We could see we did end up pushing up and taking out these highs. I'd be interested to see if it wants to break structure to the downside for a potential like short into these London session lows. That would be, I want to keep my eye out for this. So that's that. We're in on gold currently. We have this going on. Gold, not too worried about, to be honest. The only thing I would be worried about, the last thing I would be worried about until reaching these highs would be this for value gap. But on the hourly and on the 15 minute, I don't like how it looks on the 15 minute, but on the hourly, it does look great, and the hourly holds more power. So I think we're going to be okay on this. Unless I start seeing like just crazy movement, but I doubt it. We already had news for today. We had bullish news for anything countering the DXY, so SPX, gold, GU, all have bullish news bias, which probably was another reason for me to take this. Okay, but since we did that, I might as well just do the S&P right now too as well. All right, S&P still stuck in this stupid range since May 5th. It's just, we just love range trading, don't we? Look at this. Look at this on the daily time frame. Wow. Ever since April 3rd. We've just been playing within a range, and then ever since May 5th, we've been playing within a range. So, the S&P 500 is just the best. Let's see. I bet. Here, let me throw on the times. Okay. Well, this is what I see on the S&P. Kind of jack shit. We have highs above here. Depending on if we close below, depending on if we break structure on the hourly time frame in 7 minutes, which it looks like we probably will. Yeah, unless we get a big rally to the upside. Unless we don't break structure, I'll probably be bearish, dude. But again, we've been talking about this. There's just no reason to be trading the S&P if it's giving us bad market conditions, and we can find trades on other pairs. So to be honest, this it looks like shit. It broke structure here. We could find. Where's the 4 hour? Okay, so this is 4 hour equilibrium. That's something we could find a play off of, but like a high time frame play. So something off like the 15 minute. There's really not much, and then we have like this breaker accumulation, whatever you want to call it, but just this boom move down to cause the rally. So that's something I can keep my eye on. It's not necessarily something I need to mark. But I mean, this is hard price action to trade, guys. There's not much going on here. So yeah, that's kind of how I'm looking at the S&P. We'll check it when market opens, but oh man, it's pretty hot in here. I might have to switch shirts, but yeah, there's not much going on here. Lights are on, but nobody's home type shit. Did y'all hear that? That was nice. But yeah, the S&P is kind of the least of my worries. We still have over 30 minutes until New York opens, so I could give a rip. I could give a rip. Okay. Okay. Are you reading me? Alright. I might have to change shirts for real.